The Jackson Hole Economic Symposium is a big deal. Every year, important people in finance gather in Jackson Hole, Wyoming. They discuss the economy and where it's headed. This year was no different. Central bankers and economists from around the world came together to share their thoughts. The symposium is known for its impact on financial markets. Investors pay close attention to what is said there. They look for clues about the future of interest rates, inflation, and economic growth. This information helps them make investment decisions. Federal Reserve Chair Jerome Powell made a significant announcement at this year's symposium. He signaled that the Fed is considering cutting interest rates. This news sent ripples through the financial world. The Fed is America's central bank, and its decisions have global implications. Powell explained that the Fed is concerned about the labor market. While the economy is still growing, the pace of growth has slowed. The Fed wants to prevent unemployment from rising. Lowering interest rates makes it cheaper for businesses to borrow money, which can stimulate economic activity. The Bank Nifty is India's banking index. It serves as a benchmark for the performance of the banking sector in India, providing insights into the health and trends of the industry. It tracks the performance of the top banks listed on the National Stock Exchange of India. These banks include major players like HDFC Bank, ICICI Bank, and State Bank of India, among others. The index reflects the collective performance of these financial giants. Powell's announcement about potential rate cuts is likely to impact Bank Nifty. The Federal Reserve's decisions on interest rates can have a ripple effect across global markets, including India. Lower interest rates generally benefit banks. They reduce the cost of borrowing for banks, which can then pass on these benefits to their customers in the form of lower loan rates. When interest rates fall, banks can borrow money at a lower cost. This enables them to offer more competitive loan rates to businesses and consumers, stimulating economic activity. This allows them to lend money at lower rates, making loans more attractive to businesses and consumers. As a result, there is often an increase in loan applications and approvals, which can drive economic growth. Increased lending activity can boost bank profits. When banks lend more, they earn more interest income, which can significantly enhance their profitability. As a result, the Bank Nifty Index is expected to react positively to the prospect of rate cuts in the US. Investors often anticipate higher profits for banks in a lower interest rate environment, leading to increased buying activity in bank stocks and a subsequent rise in the index. Within the Bank Nifty Index, one stock that stands out as a potential winner in the next 2 quarters is HDFC Bank. HDFC Bank is one of India's largest private sector banks with a strong track record of growth and profitability. A lower interest rate environment is likely to benefit HDFC Bank. The bank is well positioned to capitalize on increased credit demand as borrowing becomes more affordable. Its strong financial position, robust risk management practices, and extensive branch network give it a competitive edge. Section 5. Understanding the Fed's perspective. It's essential to understand why the Fed might cut interest rates. The Fed's primary mandate is to maintain price stability and promote maximum employment. Inflation has been a concern for policymakers globally. The Fed has been raising interest rates to combat inflation. Now, with signs of inflation easing, the Fed has more room to maneuver. They can focus on supporting economic growth and preventing a recession. Section 6. The significance of upcoming economic data. While Powell's announcement is significant, it's not a done deal. The Fed will be closely watching upcoming economic data before making a final decision on interest rates. They will be looking at factors such as inflation, employment, and economic growth. If the data suggests that the economy is weakening more than expected, the Fed is more likely to cut rates sooner rather than later. Conversely, if the economy remains resilient and inflation remains sticky, the Fed may hold off on rate cuts for longer. Section 7. Jackson Hole, a platform for global dialogue. The Jackson Hole Economic Symposium isn't just about the US economy. It's a global event that brings together some of the brightest minds in economics and finance from around the world. Central bankers from around the world use this platform to discuss their respective economies and policy challenges. They share insights, debate policy measures, and explore solutions to common problems. This year's symposium saw discussions on global growth prospects, trade tensions, and the impact of geopolitical uncertainty. Experts delved into how trade policies between major economies affect global markets and the ripple effects of these tensions. The impact of geopolitical uncertainty was a major theme, with speakers addressing how political instability in one region can affect economic stability worldwide. These discussions highlight the interconnected nature of the global economy. The decisions made by one central bank can have significant ripple effects on other economies, influencing everything from interest rates to inflation. Decisions made by one central bank can have ripple effects on other economies. For instance, a change in interest rates in the US can impact borrowing costs and investment flows in emerging markets. The Jackson Hole Symposium provides a valuable forum for policymakers to coordinate their actions and address shared challenges. It fosters an environment where dialogue and collaboration can lead to more effective and cohesive economic policies on a global scale. This unique gathering underscores the importance of international cooperation in navigating the complexities of the global economy. Section 8. Navigating the complexities of monetary policy. Monetary policy is a complex beast, intricately woven into the fabric of the global economy. It involves a series of strategic decisions that can have far-reaching consequences. Central banks have a delicate balancing act to perform. They must navigate the fine line between fostering economic growth and keeping inflation in check. They need to control inflation without stifling economic growth. This requires a deep understanding of economic indicators and the ability to predict future trends accurately. The tools at their disposal, such as interest rates, can have a significant impact on financial markets and the real economy. Adjusting these rates can either stimulate spending and investment or cool down an overheating economy. The Jackson Hole Economic Symposium allows central bankers to share their experiences and learn from each other. This exchange of ideas is crucial for improving the effectiveness of monetary policy globally. By learning from each other's successes and failures, central banks can better navigate the complexities of the modern economic landscape. In conclusion, navigating the complexities of monetary policy requires a blend of art and science. It demands not only technical expertise, but also the ability to adapt to ever-changing economic conditions. As the global economy continues to evolve, the role of central banks and their monetary policies will remain pivotal in shaping our financial future. Section 9. Conclusion. Jackson Hole's enduring relevance. The Jackson Hole Economic Symposium remains a pivotal event in the financial calendar. Powell's announcement about potential rate cuts has sent a clear signal to the markets. Investors are now anticipating a more accommodative monetary policy from the Fed. The symposium's focus on global economic challenges and policy coordination highlights its enduring relevance. As the world grapples with uncertainties, the insights and discussions from Jackson Hole provide valuable guidance for policymakers, investors, and businesses alike.